it's Susan Cook with The American Dream and your host with Explore My Town, Valdosta. And I'm here today with Spring Henry with Moto Mortgage. Thank you again for talking to me today, Spring.
Thank you for having me again, Susan. It's always great to sit down.
I know, and I'm really enjoying our talks and the education that we're doing for the public. So today we are talking about VA loans, and we're going to do a little series because it is a lot to unpack and we want everybody to get all the information that they can. If you don't hear something that you need to know, please reach out to me or Spring and we will be happy to answer any of your questions. So the first thing that we want to talk about is the misconceptions of VA loans, about debt to income ratio and how much money they need, all that kind of good stuff. So let's talk about debt to income ratio. What is debt to income ratio?
So your debt to income ratio is how much debt you have, how much money you pay out each month compared to how much income that you bring in.
Mm-hmm.
So what impacts your debt to income ratio are things like automobiles, credit cards, any installment loans you have like furniture, anything that you use credit for is your debt.
Right.
And you're comparing it to your income, and that gives you a percentage.
Let me ask you this. If you're paying rent, is that considered in your debt to income ratio?
Not for the purposes of a home loan. They
Okay.
do use your rent to compare what you're paying now compared to what you will pay. That's called a housing ratio.
Okay.
But right, for our purposes, we're including things that actually fall on your credit report.
Okay. All right. And so in our area, we deal with a lot of first-time home buyers, active duty, usually buying their first home. And they're usually between the pay grade, active duty, E3 to E6, single or, young marrieds, whatever. And they're PCSing into our area. So their salary is usually between about $30,000 to $35,000. And so that is what, $3,000 a month? Gross? Ish. $3,000 a month. So if they have a car note of $1,000,
Correct.
that's going to be about 33% of that, just that alone.
Just that alone. And so when you're looking to get a VA loan, you're not using just that car.
Mm-hmm.
You're also including what the mortgage is going to be, the taxes are going to be, the homeowner's insurance. Everything is getting put together for what your actual mortgage payment would be, added in with that $1,000 that you pay, and then dividing by your income. So when you're talking about debt to income ratio for a home, they are considering what the actual home will cost along with your other debts.
Okay, so, and they can't count their BAH that the government gives them. Okay, and see, and that's a little disconcerting. And it's one thing that they just don't know, right? So VA is 100% loan.
Yes.
And they are responsible for their closing costs. This is a big misconception about VA loans.
Big misconception, yes. That 100% of the loan is paid for, and that is true. But you have to pay to get the loan started in the form of something called closing costs. And that is something that you can get help with. You can get seller concessions to help pay some of the closing costs. A great real estate agent like Susan will work diligently to find sellers for you that can do that. But you still have to have a little bit of money in reserve.
And you like to have, for your first-time home buyers, you need to have and what is the figure that you like to see?
I say I like for them to have at least $3,000.
Okay.
If I see $3,000, I feel like on a lower priced home, I feel like that's something that a lender will work with. But basically about 3 months worth of payments. So, and that's usually going to equate to about $3,000.
And it's going to cost you to get into the house. Okay, so I tell all of my buyers that I need you to pay $2,000 before we close. Now, if I have been able to negotiate you your closing costs paid for by the seller, you're still going to need that $2,000. There's no way around it. You have to pay something called an earnest money deposit, and that is paid after we get the contract accepted to the title company. We give them $1,000. Then I don't care if it's new construction or a resale, I'm going to insist that you have a home inspection. And the reason for that is because I am not an expert on condition. It's not my job. My job is to get you value and to get you concessions, to negotiate the terms of what you're going to pay. Okay. The value, but the condition of the home is really important, and so you can't get around a home inspection. And then that's around $300 with the inspectors that I use, and $650 for an appraisal. And no lender is going to let you pay that at closing. You have to pay that when it's ordered. And you know, that's just the way it is. So $2,000 to even start looking for a home. If you don't have $2,000, then we don't need to look for a house. Yet. And you need to move towards saving that kind of money.
Right. Taxes, when you get your tax return money, that's a great time to save. That's a great time.
You come back from deployment.
Yes.
And we've got a lot of kids being deployed here in Moody. So that's a good start, though, I think, to help people to start to get into a loan. What is it that you're going to need? Now, we're going to do this as a series, I think, Spring. We're going to talk probably about 2 or 3 times about VA loans, because it is a lot to unpack. So if you have any questions that you would like for us to talk about, send me a message, or Spring a message, and email, text. Our information is all right here, and we'll be happy to cover that for you and answer any of your questions. So for now, let's wrap it up. I'm Susan Cook with The American Dream.
And I'm Spring Henry with Motto Mortgage. Thank you so much for having me again, Susan.
Bye-bye.